Hello dear students and welcome back to my channel Learn with Ifrashik. So today in this video we will begin with the preparation of financial accounting, that is FA1. So in that we will study about accounting process. In this I will give you the basic idea of the terminology of accounting, right? Which is very essential to pass the journal, ledger and trial balance. So what is account? An account is a record of financial or other transaction or related to a specific person, item or a thing. So when we record any transaction, that may be financial or any other transaction, so recording of that is known as account. So for suppose we purchase a pen or a pencil and pay an amount for that. So this is an financial transaction as it is considered in monetary terms. But when something is not commercial or non-monetary, for suppose as charity, then it would not be considered as financial transaction. Okay. Then next is classification of accounts. So this account is classified into three types: personal account, real account and nominal account. So dear students, concentrate over here and do not skip the video and watch it. So personal account. Personal account is an account which consists of natural or a representative person. Who is a natural person? A human being or an individual. For suppose Ravi is a person and he is holding an account. So Ravi account is a natural person's account, right? Then next, representative person's account. SBI. So SBI is a bank which is considered as representative person. So these are the example and definition of personal account. Next is real account. So this real account consists of tangible and intangible goods. So we all know that tangible goods are the goods that can be touched and seen and also felt, right? So what are example of tangible goods? Cash, furniture, building. But intangible goods, we cannot touch it, right? We cannot even see it. So goodwill of a company or copyright of a firm is example of intangible goods. Then next it comes to nominal account. So nominal account consists of income, expenses, gains and losses. So examples are rent paid, salary account, etc. So hope you have understood this. If you did not understood, just go back and watch it again. Next we'll move forward to golden rules of accounting. This is also very important. So first is personal account rule. Debit the receiver, credit the giver. So we have to debit the receiver and credit the giver. So further when I will show you in problems with the explanation, you will understand it in more better way. But for now you listen and understand it. You even make note of this or take the screenshot. Real account. Debit what comes in and credit what goes out. Debit what comes in and credit what goes out. Nominal account. Debit all expenses and losses, credit all incomes and gains. So these are very important rules on basis of which we will classify a transaction. Okay. So now we will begin with the problem of journal. So how we have to pass the journal entries and the transaction, you will learn over here in this video. So do not skip anything, pay attention and have a look over here. So September 1st, Ramesh have started a business with rupees 1 lakh. So by default, this entry would be cash to capital. If in entry or in the transaction it is mentioned, Ramesh have started business with building of so and so amount, with furniture of so and so amount, with cash of so and so amount. So the entry would be cash, building, furniture, then to capital. Okay. So how we have to write this entry? Cash account debited to capital account. So see, the pro forma, this table is known as pro forma. Now as we are graduates, So we should also increase our vocabulary. We won't say this table, but we'll call it as pro forma. So date, particular, LF, debit and credit amount. So this is how you have to draw the pro forma. Of what pro forma it is? Journal entry. Okay. So the next entry, from here we will see how we have to classify it. He paid into bank rupees 20,000. So Ramesh started the business. So Ramesh paid into bank rupees 20,000. So in this, what we have first, we have is bank, right? And next, what we pay into the bank is cash. So what is cash? Cash is a tangible good, right? So it will come in real account, whereas bank is a representative person. So bank would be considered as personal account, right? So here, when we pay the account to the bank, then the bank will be the receiver, right? So what we have to do? We have to debit the receiver according to the rule of personal account. Debit the receiver. Now, cash, so this cash is part of real account. So what is the rule of real account? Debit what comes in and credit what goes out. So cash from us is going to the bank. It is going out, right? So we'll write here credit. So what the entry would be? Bank account debited to cash account. Hope you all have understood this. Then we have to write the narration. Been cash paid into bank, as we have deposited some amount into the bank. So debit amount over here. Beside bank 20,000, then next. Credit amount here in the line of cash 20,000. I hope this is clear. So the third entry is transaction on September 10th. Purchased furniture and paid by check rupees 5,000. So we have paid, purchased furniture, right? So first thing over here is furniture, and second thing in this is check. So when we are paying from the check, it means the transaction is taking place in bank, right? So when we purchase this, what is it? First of all, we have to classify it. It is tangible good, so it will come in real asset. What is bank? Representative person. It will come in personal account. Okay. So debit what comes in, credit what goes out is the rule of real account. We have to apply the rule. So when we purchase the furniture, we are getting the furniture, right? So debit what comes in, what is coming in? Furniture. Now rule of personal account apply over here. Debit the receiver, credit the giver. So bank is paying the amount on behalf of us, so it will be credited. So what is the entry? Debit furniture account debited to bank account. Look over here. Furniture account to bank account. Amount is written over here. Date is mentioned. Narration. Been furniture purchased and paid through check. Hope you have understood this. Next entry is purchased goods rupees 15,000 for cash and from Amrit rupees 4,000. So see students, one very important thing, when in question it is mentioned purchased goods. So while doing the entry you will write purchase. You will not mention goods account. Okay, you would never ever mention goods account. But if it is mentioned purchased furniture, purchased machinery, then you will mention in your entry or in your transaction machinery or machinery account, not purchase account. Hope you have understood this. So purchased goods for rupees 15,000. So first is purchase and next is cash. So when we are purchasing goods, this is tangible, right? Tangible goods, real account. Debit, what comes in when we purchase something, we get that thing. Suppose I have purchased this pen, so I'm getting this pen, where else I'm paying to the seller of this the amount, that is cash, right? So see, both are real account only. Debit, what comes in, so what will be debited over here? Purchase goods. What would be credited? What I'm giving is cash. So the entry, okay, we have one more over here. Purchased goods and from Amrit rupees 4,000. So see, one is cash entry and another is credit entry, of which amount will be further paid by us. Okay. So in this, what we have to do is purchase, as we are getting real account over here. So debit, what comes in. Next, Amrit. So name of a person is mentioned over here, right? So this entry is credit based. Next, it will come in personal account, as Amrit is a natural person, right? Then next, we have to classify it. Debit the receiver and credit the giver. So he is the giver, will be credit. So see over here, purchase to cash, purchase to Amrit. Account debited. So you could write it like this, different way, or else you can combine it. Purchase account debited to cash to Amrit account. Okay. So I have written over here combinedly. Purchase account to cash to Amrit. So I have totaled the amount, sum up the amount over here, that is 15,000 and 4,000. So 19,000 purchase I have done in total, where else paid cash rupees 1,500 and of credit goods are of 4,000. So narration bean goods purchased. Next entry is of 18 September. He withdrawn goods for personal use rupees 1,000. So by default you also learn this entry. Here are few entries. If you learn it or if you remember it, it will be very easy for you. Drawings account to purchase accounts. So when a person, you always remember this, a company is completely different from the owner of the company. Company and its owner are not the same. Okay. So here some goods are withdrawn for the personal use of the owner of company. So your entry is drawing account to purchase account, being goods withdrawn for personal use. Next, the entry of 19th September. Returned goods to Amrit. So here, see, whenever returns is mentioned in here, in the question, so it means before you have done any purchase from Amrit or you have sold some goods to Amrit. So we'll check what we have done in the before question. Over here, see, purchased goods from Amrit of 4,000. So what kind of return is this? Purchase returns, right? So two things have been mentioned over here, Amrit and purchase returns, right? So see, Amrit personal account, as natural person, so his debit. So as one side is debit, other side will be credit automatically, right? So we'll look at the entry. Amrit account debited to purchase returns account. So being goods returned to Amrit, or you can also write being purchase returns done. Next entry is of September 20th. Sold goods to Arvind. So till now we have did of purchase, but now we are doing over here sales. So when we sell or we sell the goods, so two things are there. One is sales, another is cash, or it can be bank also. If in question it is not mentioned bank, then it is cash. Okay, for you we'll take cash. So suppose I am selling a paper for 5 rupees, 10 rupees, anything it may be. So when we sell this paper, we'll get cash, right? So we are receiving the cash. So cash is real account, tangible good, right? And then what comes in? Debit what comes in? So when we sell this, we'll get cash. So we get cash, it is coming in, right? Next is sales. What is sales? Income, right? So it will be in nominal account. So this will be credited. So as one thing is debit, another thing will be credit. Okay. So the entry will be cash account to sales account. So this entry I am explaining you when the amount is being paid in cash. Okay. But have a look. We have over here sold goods to Arvind. So your cash is not mentioned, right? Your name of a person is mentioned. It means we have given goods to someone on credit basis. We don't have cash right now, right? So in this entry, we have two things. One is Arvind, another is sales. So Arvind is a natural person. So it will come in personal account. So what is the rule of the personal account? Debit the receiver and credit the giver. So Arvind is the receiver of the goods, right? So we will debit Arvind as he is receiving the goods. Sales will come in credit. What entry will be? Arvind account debited to sales account. Okay. So next we have paid telephone charges through bank. So see, what are telephone charges? Whenever it is mentioning any expense or any charges, for suppose telephone charges, advertisement, electricity. So these are all kind of expenses, salary, right? So what expenses will come in? Nominal account, right? So this will mean debit. When we are paying through bank, so bank is paying on behalf of us, right? Amount is being going out from the bank. So it will come in personal account, credit the giver. So it will come in credit. So entry will be telephone charges account to debited to bank account. Okay. Next, goods distributed as free sample of rupees 1000. So see, why a company will distribute their goods as free sample? For advertising. when a company wants to promote their goods, so what they will do, what will be their marketing technique, they will give the free samples of their product. So the entry will be advertisement to purchase account. So whenever you get the transaction, goods distributed as free sample, just remember this, okay? Advertisement to purchase account, advertisement to purchase account. We'll see how the entry is written. Advertising account debited to purchase account. So we'll mention the amounts over here, date, and narration will be written as being goods distributed as free samples or being advertising done. Okay. So the next would be paid for stationery, rent, and salaries. So see, I have already told you this all are expenses. Rent is an expense, so it will come in nominal account. Salary is an expense, right? Company is paying this amount, so nominal account. Then stationery is also an expense, nominal account. So if we are paying from bank, then bank will be written, but now as of we are paying cash, so to cash account will be written. Okay. As cash is real account, tangible good, credit what goes out, so it will be credited. Dear students, every transaction have two sides. One is debit and another one is credit. So if one thing is being debited, another thing automatically will be credited. So hope you all have understood till here. You also practice this problem.